Welcome to Deep Kiran Classes of Commerce and Expert Coaching with Guaranteed Success. Please subscribe to my channel and hit the bell icon for the latest update.
Now we are going to start with the 12th practical problem on accounts for not-for-profit concern. Okay, on page number 122. Following is the receipts and payment account of Dhananjay Library, Mumbai for the year ending 31st March 2020. Receipts and payment account for the year ending 31st March 2020. Receipts amount, payments amount. To balance brought down 5,000, to admission fees 4,500, to subscription 20,000, to lecture hall hire charges 4,200, to miscellaneous income 250, to interest on investment 900, payment side salaries 9,000, by rent 7,500, by investment 6,000, by stationery 1,350, by electricity charges 850, by books 5,000, by outstanding expenses 500, by balance carried down 4,650. You are required to prepare income and expenditure account for the year ended 31st March 2020 and the balance sheet as on that date. The following information is also made available to you. See, on 31st/3/2019, the library had the following assets: books 50,000, furniture 6,500, and machinery 30,000. Then second, subscription received in advance amounted to rupees 500. Outstanding salaries 1,300, for rent 950. 50% of the admission fee should be capitalized. Then furniture is to be depreciated at the rate of 10% per annum. Library books were purchased on 1st April 2019. Charge depreciation at the rate of 10%. The investments were purchased on 1st April 2019 and they carry an interest at 20% per annum. Now you have to prepare income and expenditure account and the balance sheet. Okay, here one more thing you have to prepare: the opening balance sheet, because in the very first adjustment they have mentioned the date is given as 31st March 2019, that is opening date, because the accounting year starts from 1st April 2019 to 31st March 2020. Okay, first we will see the opening balance sheet. See, opening balance sheet: liabilities amount, assets amount. Now see, books 50,000 they have said, furniture 6,500 they have said, machinery 30,000, and cash 5,000. It is all mentioned in the cash, where we have taken this cash balance from the receipt side of the receipts and payment account, the opening cash balance. Okay, so the total comes to 91,500. But in your advance subscription is mentioned as 500. Okay, so this 500 you will minus, so you will get what? Capital fund. You had to take out the capital fund. Okay, now you have got the capital fund. Now this capital fund we are going to write on the liability side: capital fund 91,000. Is it clear to you? Now we will start with income and expenditure account. So in the books of Dhananjay Library, Mumbai, income and expenditure account: expenditure rupees, income rupees. Now see, salaries 9,000 is given to you. Outstanding salaries how much? 1,300. Here we have written 1,300. The second effect, where it will go? It will go in the balance sheet. So outstanding expenses Salaries, see, 1,300. Is it clear? Two effects we have taken. So to rent, see, 7,500. Outstanding rent is also there, 950. If you total up, the total comes to 8,450. Another effect, see, rent, outstanding expenses, rent 950. If you total up this, you will write in the outer column 2,250. Now see, to stationery 1,350, to electricity 850, to depreciation on furniture, it is given. The opening balance sheet furniture was 6,600, of that 650. Library books at the rate of 10%. Now see, here on the asset side, books opening balance, see, books 50,000 it is given, so we have written. In the payment side, books are there. That means you have purchased new books worth rupees 5,000. So total will be 55,000. On that you are going to take depreciation at the rate of 10%. That will come to 5,500. And this depreciation we are going to take it over here, 5,500. Is it clear to you? See. Now, here we have completed the expenditure side. Now income side, see, by admissions. Now of that 50% are to be capitalized. That means for revenue only 50%, that is 2,250. Then subscription, 20,000 we had received in advance. Okay, we will minus that received in advance. So total subscription will be 19,500. By lecture hall hire charges, we had a lecture hall and we used to hire that. So their rent has come, or that charges have come to rupees 4,200. To miscellaneous income, 250. Now see, interest on investment. Investments are of rupees, how much? 6,000. Okay, this year we had done the investment of rupees 6,000. Of that 20%. 20% will come to how much? 1,200. Out of that we have already received 900. Okay, out of 1,200 we have already received 900. So outstanding interest is how much? 300. Here the total comes to 1,200. Here add outstanding interest 300. So 6,300. Is it clear? Now we will total up the income side. Income side total comes to 27,400. We will write on the debit side. And debit side total comes to 27,100. That means there is a surplus of only rupees 300. Is it clear to you? Now we will move on to balance sheet. I have already told you how we have taken the capital fund. We had first prepared the opening balance sheet. Of that 91,000 capital fund, the balance will be known as capital fund. So capital fund. Then add a surplus. Surplus is how much? 300. So we are going to add. So what it will come to? 91,300. Now admission fees. 50% are revenue, that means remaining 50% are capitalized, that means 2,250. I have already explained you this, outstanding expenses, salaries and rent. And there is a advance subscription which is not still due, 500. So here we have completed the liability side. If you total up, the liability side total will be 96,300. Now we will move on to asset side. Books, see, opening balance of books 50,000, here also 50,000. Then I said we have made purchases of 5,000 during the year. Then we have charged depreciation at the rate of 10%. So outer column it will come to 49,500. Okay. Then furniture, as such nothing, no additions were there. So we had taken only depreciation at the rate of 10%, 650. So outer column 5,850. Machinery, nothing is there as it is 30,000. Investment, see this year we have made an investment and the interest will be received at the rate of 20%. But how much is still outstanding interest? Only 300. So that we are going to add and we are going to write it on the outer side, outer column 6,300. Cash. Now what this balance, the on the payment side, the very last balance is that we are going to write it over here, 4,650. If you total up, this also comes to 96,300. I hope now you have understood this very well.